What's going on, everybody? TG here, back with another video. Before we start this video, two quick things. First off, we have a Discord and link in the description, totally free, and we call out trades and different positions that we are in live time. Totally free. If you want to join, go check it out. Second off, hit that like and subscribe button for me. It means a ton to me, and you guys can stay updated to any new videos. But this video is all about Alibaba and why I invested about 20K into Alibaba. I'm very bullish on Alibaba. If you guys know what Alibaba is, it's essentially the Chinese Amazon. They differ in a few aspects, but very similar. They have their main e-commerce space. That's where they get the majority of their revenue from. They also have a cloud storage space, which they also have been picking up recently and bringing in a lot of free cash flow because of that. Alibaba is structured pretty similarly to Amazon, except for the fact that they don't have fulfillment centers, so they don't really have to spend as much on upkeep. Whereas Amazon, obviously, the biggest problem with them is their profit margins. Alibaba has a very, very strong profit margin. If we go overhead and look at that profit margin, last quarter was about 18.62%. The quarter before that was about 30.9%. It's very different than Amazon's about 6%. Obviously, Amazon does a lot more revenue, but Alibaba keeps a lot more of their profits. Another great thing about Alibaba is they have a very low PE ratio of only 32.6. So it's a solid growth company, and it still has a very low PE ratio. A market cap about 661 billion for the US, like US dollar currency, if we translate that. That's very low. I mean, that's less than Tesla, but everything's less than Tesla nowadays. So it's very low. Also, they have very strong growth. We're talking 30% year-over-year growth and 29% in core commerce revenue growth. That is huge. Also, look at that cloud computing that I was talking about. 60% year-over-year growth, and that is a big profit margin that they bring in. Also, their consumers are just continuing to increase and increase. Just a plethora. I mean, China is such a huge space. You have that many millions of daily active users is incredible. And then their profitability as well. Last quarter bringing in 6.1 billion in profit. That's just incredible. That's literally like what Amazon does right there in profit, except they're making it significantly less. So that as the more they grow, the more they're going to make as well because of those profit margins, which I really like. Now, they've had their fair share of issues. We cannot deny the fact that their Ant IPO was delayed with everything that happened, potential banning on U.S. stock exchanges, and then the beef between Jack Ma and the president of China. So there was a lot of issue, and that is why the stock actually took a big hit recently. If we go ahead and look at it like 6 months ago, it was high. I mean, we're talking October. This stock is $325. And it just fell off a cliff, losing a fourth of its value at one point. I scooped a lot up at the lower spot, so we're already up about 25% on our investment, but we can still get a lot more out of this, almost 3,700 more, because we did a lot of put credit spreads. And I like Baba long term, I really do. If I ever see it dip back in the 220s, who knows? We might not see that, but if we do, I'm definitely going to pick up some more because I really like this company, and I think it has a strong forward-looking as well. Now, you have a company that has a low PE ratio and it's extremely forward-looking. That's the best type of company because it's undervalued. It's fundamentally undervalued, and it still has a lot of growth prospects. Alibaba is not going anywhere. The e-commerce space is continuing to grow. Cloud computing is continuing to grow, and that's just going to add to their core business metrics and their profitability, and all that is just going to continue to increase year over year. And that's why we've been seeing some really good quarters at Alibaba, and that's something that's very important when you have like huge year-over-year growth in a company like that. We're talking 30% year-over-year growth in revenue of that big. That's huge. And like I said, the profit margins as well. Obviously, last quarter wasn't as big, but you still look at it from a couple quarters ago, they're still growing at a significant rate, and that is always very good to see a company grow at that rate. Like I said, the bad news is out. You have the Ant IPO, the U.S. stock exchange potential delistings. Under a Biden administration, things are going to be very smooth with China, and I don't see anything going wrong. Jack Ma, I don't believe that China is going to hurt Alibaba any more than they already have. I think they use it more as a making an example out of it, but I don't think they're going to hurt their golden child, which is Alibaba, which is the biggest company in China. So I don't think they would do that. I think it's going to continue to grow, and I would not be surprised in a couple months we're in the 300s again, because I think that's very likely. And Baba's a solid company, so I'm going to continue to invest in Alibaba and hold my positions. I think we're going to see some big growth on this company, but that's really about it, guys. I really like Baba. You guys know I'm a big e-commerce fan. I think e-commerce is the future. We have a lot of A lot of Amazon as well, just selling some covered calls on Amazon as well, making some money. We also bought a debit spread on it today for earnings. We think it's going to really pop for earnings. But, we really like forward looking on e-commerce because e-commerce is just going to continue to grow and grow. And I like tech. So I think that you mix the two of them together, and you have a very strong company like Alibaba or Amazon. And that's why I'm investing in both. But let me know what you guys think about that. But remember to like and subscribe, and I'll talk to you guys next video. Have a wonderful day, guys. Bye.